say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What's up?
My name is Jeff. Even the creators have said it's going to be the predecessor of CBDC.
What that taught me was that I need to be self-sufficient.
A solid DCA investment strategy, and pretend the red sell button doesn't even exist.
We about to go up like.
What up, DGens? Hey, we got some fire content for you guys tonight. We're going to be talking about COINBASE. We're going to be talking about Base and CHAINLINK. Two pretty great news articles that we're going to be covering. So we got some fire content on the way. But before we get there, make sure you guys, if you haven't already, you guys smash that like button. Make sure you guys are commented and subscribed. Make sure you guys check down in the description, find that Telegram link if you guys haven't joined up already. And make sure you guys are following us on social media. But the biggest thing that you guys could help us out with, if you guys could take that URL and share it across Facebook, share it across your Twitter, share it across Instagram, everywhere that you have social media, blow it out there into the ether so that more eyes can get on our content. So with that being said, we appreciate everyone that's watching us live. We're excited about tonight's show. Let's go ahead and kick things off. Mr. Zenith, Mr. Co-host. How's your week going, buddy?
Week's going pretty well. Happy to be co-host for the first time, so this should be a good show. Actually got a chance to get outside yesterday, record some silly content, so to speak. It's basically just trying to do Halloween nonsense, try to relate it to crypto somehow. So that's what I've been up to. All right, awesome. With that said, I'm going to kick it over to our technical analyst, Jay. How you doing, buddy?
Yo, I'm doing good, man. Hey, if you're trying to make content and you're trying to basically make it crypto adjacent, you might want to hit up Sam, bro, because Sam does a lot of that. He kind of ties in a bunch of the skits that he does, and he puts a crypto spin to it. So if you want some ideas or maybe you want some tips on the production and things of that nature, you might want to hit up Sam's, man. Shout out to Sam from Brother 64. But yeah, my week's been pretty damn good. You know, same shit, different day. They're trying to accumulate as much capital as possible so I can throw it at this market that seems to be trying to fake people out. Look, man, this might be my personal bias as a technical analyst who is pretty heavy on following the 60-day cycles. But I was telling the guys earlier, and we'll go over this a little bit in the TA section. We don't really have a candidate for a cycle low yet, and we're only in day 40 of the cycle. And because people are trying to front run October as Uptober, I think this is just my gut feeling, man. This is just my gut feeling. I think people are going to FOMO into this green candle and we're going to come crashing back down. But I'll speak more on that later as when we get to the TA. Will, how you doing, buddy?
I'm doing pretty good, man. I actually have a house to live in, like for once ever. I'm
where you
over
at right
here
now,
in
bro?
St. Louis.
St. Louis?
I'm over in St. Louis, man. Just arrived at some point yesterday. But
nice.
Enough of New York, enough of visiting Casey, enough of visiting Tower people up there and doing all that crap. It's now time for some Missouri life. So Missouri. I'm down here having pork steaks and chilling out on rivers and going up in towers, and maybe I'll visit the Arch at some point. But yeah, St. Louis, that's where I'm at. That's what I'm doing. As far as fun and interesting stuff goes, I understand that there's a little bit of craziness going on in the Bitcoin world right now, Jay. I don't know if this is a good transition to go into that, but that's something that's happening quite recently.
Yeah. Hey, but beforehand, did Mr. Cat ever come back, or did he just go his own way?
Nah, dude. Mr. Kitty's long gone. I don't know. I don't know where he's at. He's chilling out up in the mountains.
MGTOW.
Yeah, yeah. He went exploring, and I don't know if he got yanked up by a bear or like a coyote or something. But Mr. Kitty is no longer with me, so I don't know. Here's hoping that he found his way up into a tree, and he's just been hanging out in a tree for the last month. But I haven't seen him, heard him, nothing. So good luck to him wherever he's at. missing in
Yeah.
action, killed in action. Who knows?
Yo,
Well,
what if
I
he
mean, hey.
shows up on your doorstep in like 2 weeks?
Dude, that'd be pretty
Dad,
cool.
you left me.
I'd be pretty pleased if I got a call from one of the townsfolk, because dude, I printed out like 100 fucking flyers and just stapled them to every single telephone pole in like the entire little mining town area. And and they're all like laminated and shit. So they're gonna be up there for a while. So sorry, people of Lion Mountain, I kind of polluted the hell out of your town with a shit ton of flyers and stuff. But if I get a call from one of them saying, "Hey, I found your cat," then I'll swing on, just take a short trip up to the fucking northeast side of the country, go pick up my cat. But yeah, Mr. Kitty is no longer with us.
Man, that's crazy.
Here's
That's-
one for the old boy.
Yeah, for sure. So,
The old boy.
one for the old boy. So how is it so you're used to being on your phone and in your driver's seat. So how is it sitting in front of a computer having a stream up and all that stuff?
Bro, it's kind of nice, man. So I can see the YouTube chat. I can see I got a nice big old picture of like what's going on. I've got my whole fucking little battle station set up here. I got my webcam. I can look up stuff on my phone now. I can do all sorts of research. Like, whereas before, like if you guys were typing in the YouTube comments and I was on my phone, it's like, good luck, man. I can't see any of that shit. You might see me like put my hand over the camera, or whatever, while I'm trying to like respond to our backstage like stream production chat and be like, hey, we're gonna do this transition next. I'm sitting there like on my little phone. Now I got a whole fucking computer. I'm ready to roll, bro. It's like I'm back in the shipping container again. So
Are you? All right, AJ, there's quite a green candle going on Bitcoin right now. So why don't you talk to the folks a little bit and give your opinion and let's see what the chart's telling us.
Oh my God. All right. Give me 1 second here. Let me share my screen with you guys. Ooh, we got some juicy action going on in the Bitcoin chart today. So let me know if you guys can see that. I'm assuming you can because it tells me
man,
on
you're
my
good.
end that sharing. Cool.
this
All right,
big old
so
green candle.
we are currently, we actually just had the daily close about 9 minutes ago. So I was going to say we are on day 40, but we are currently on day 41 of the 60-day cycle. Now, it's pretty obvious already if you haven't checked the charts yet, but we have this really big green Chad candle going on today. Now, like what I was saying earlier, personally speaking, I think this is a fake pump. Okay, this is just me personally, and this is, like I mentioned earlier, because of my heavy bias towards technical analysis using the 60-day cycles. Now, we are only currently in day 41 of the 60-day cycle, right? The earliest candidate that we have for a cycle low is right here. This was on Monday, September 25th of last month. And that's only 34 days into the current cycle. Now, is it impossible for us to have a very short cycle? No. We've had cycles before lasting anywhere between 35 to 40 days. So it's not like this is completely out of the scenario, right? But I'm sure you guys know that me as a technical analyst, unless we have confirmation that the pattern has broken, I'm not going to assume that a pattern has broken. And so what am I going to suggest to you guys who are also looking at this candle and like, what the fuck? Like, what's going on? What I'm going to say is, all right, this is me personally, what I'm doing. I'm still holding my DCAs, and I am looking for a cycle low to enter sometime between the following week all the way up into October 11th. That's that Wednesday, right? Because that will take us to about day 50 of the 60-day cycle. And that's usually where you want to start looking around that time frame, is when you want to start looking for a potential cycle low. Now, I was discussing this with the guys earlier, and because we've had a pretty sustained move to the upside, I'm not talking about the candle today. I'm just talking about when we had this the beginning of this move, right? This was second week of September 12th. When we started moving to the upside, right? We tested this short-term downwards trend line that was serving as resistance, and we tapped that once, and we got rejected and came back down to that 20-day moving average, this orange line right here. But what you can tell here is that we've spent a pretty significant amount of time above that 20-day moving average, which is a pretty good sign for Bitcoin, right? This is usually telling me that, okay, this upward move has some strength, right? It's got some wind in its sails. It's not just we don't care about it kind of pump. It's it should be a pay attention kind of move, right? And like I mentioned, we've stayed above that 20-day moving average pretty much for the entirety of that move since we moved up around September 12th. And we've only spent, what is that, 1, 2, 3 days below it. And then we started moving back to the upside, right? And so it's not like this move to the upside doesn't have any wind in its sails. So I'm definitely thinking that if we come down, right, this might be one of the rare instances where we have a time-based low for Bitcoin instead of a price-based low. And what I mean by that is a time-based low is you're looking for a low to finish out the current 60-day cycle closer to that day 50 mark, but you're not looking for a price to come down below the lowest price that we had in the cycle, which was right here. This was early. Once again, this was second week of September, and this was a low of 24,920, right? And so a price-based low means that we're going to have a price to end the 60-day cycle below this low of 24,900. However, because of the strength of this move, I am personally thinking that unless we get any significant bearish news over the next few weeks, that we are going to get a time-based low for Bitcoin. And if we go lower, we're probably going to only retest this area of 25,000, right? So I think that we're definitely going to see an opportunity to buy sub 27,000 Bitcoin again. But once again, right, that's me. That's my personal theory with the current 60-day cycle. And here's another interesting thing, guys, right? As soon as this move happened, I went online and I was like, all right, there's got to be some kind of major news happening right now that I'm completely missing out. And there was absolutely nothing, right? And I checked like every hour on the hour when this move happened, and there was nothing being posted. Usually when something like this happens, right, there's some kind of fundamental news that goes along with it, right? I thought it had something to do potentially with the ETH futures ETF being announced. I think that is set to go live on Monday. I thought it had something to do with that, but absolutely no news on the horizon currently. Obviously, I haven't checked within the last few minutes because I've been speaking to you all. But no major news hit my feed, whether that was on Twitter, on Instagram, all the different news sources that I follow for cryptocurrency. None of them had anything to say about this pump. And so I think this pump, to be quite honest with you folks, I think this is just people trying to get FOMO investors into the market and to basically sell on them before we head down into a cycle low here in the second week of October, right? Like I said, look for a cycle low to come in sometime in the second week of October, right? From tomorrow to all the way to October 11th, right? That Wednesday, October 11th, which is day 50 of the current 60-day cycle, and which is where I will usually start looking for either a time-based low or a price-based low, right? So I gave you guys some indicators about where we could potentially head down to, right? I think we're just going to touch that that $25,000 again. And if you look here, right, this yellow line, this is your 200-week moving average. So this is another small coincidence, right? Out of all the places that this pump could have run out of steam, it gets rejected right at that 200-day moving average, right? And so the reason why this happens is because when Bitcoin loses that 200-day moving average, it's going to serve as pretty major resistance, right? And that usually happens during the bear market, right? Once we lose the 200 DMA, during the bear market, it stays under there until our next bull market starts. Now, don't get me wrong, we are definitely at the very start of a bull market, but because we have spent a considerable amount of time underneath that 200 DMA, don't be surprised if this thing acts as pretty hard resistance, right? Unless we get some really bullish fundamental news, I guarantee you that this 200 DMA, this yellow line right here at $28,000, is going to serve as pretty stiff resistance for price. And so it's very important to really pay attention to what's going on in the news cycle over the following week, right? Especially considering the fact that Congress, it's probably both the Congress and Senate, only proposed a short-term bill to hold off on them having to shut down, like to basically avoid the government shutdown, right? And so really pay attention to what's going on in the news cycle over the next week or so, especially heading into the second week of October. Because any bearish news could slap us back down below 27,000 Bitcoin again, right? And anything crazier, we're probably going to see once again price head back down to that $25,000 area. And this is just me being overly suspicious, but the fact that this pump happened on the 1st of October and then gets rejected at 200 DMA, that's just me being overly suspicious about any pump like this, especially with no major fundamental news backing it, right? However, if this is a sustained pump, I'm just going to give you guys a few price targets to look out for so that you can be confident that this pump is something that Bitcoin can sustain. Look at that. If we take a fib retracement from our high from our last cycle, right, which was this 31,818. This is our current yearly high. If we take a fib retracement from that high to our current low, right, we come up on this 0.382 fib level of 27,562. And for me to be very confident that Bitcoin can maintain this price, one, we have to recover it, which we did. And number two, we have to start closing days consecutively above this, right? That gives you really strong confidence that the price and the overall current market really wants to start getting bullish again and start to reverse this downwards trend, right? This is also important. Like I mentioned earlier, look at this. We've already broken past and recovered above that short-term downwards trend line that we've been forming ever since we got that yearly high of 31,800, right? So if we can start recovering strongly consecutive days and weeks, closing weeks above this trend line, and then also above that 200-day weekly moving average, and also above that 0.382 fib level of 27,500, then you can bet your bottom dollar that this move can be sustained and that Bitcoin is really trying to reverse that trend and head upwards into October, right? But like I said, my suspicions are that this is a fake pump, that the market is trying to get investors to FOMO into this green candle, and that we're going to get rejected by this 200-day MA and head back down to around 27,000, possibly see $25,000 price areas again. That's all I have for today's TA. Just wanted to keep it short and sweet. I just thought that the price action today is pretty fucking interesting. Right on the 1st of October, getting rejected at that 200 DMA, But that's me as a technical analyst. Sometimes I find things hilarious that other people might not find funny. So what do you guys think about the current price action, man? What are you guys seeing on your charts?
Well, I just
right there. Go for it.
Yeah, I was saying I just looked through crypto Twitter, and I mean, there's no news. You know what I'm saying? So it is pretty interesting. I think that I don't know. Like, I didn't think that many people would just be buying into the hype of October. You know what I'm saying? I don't know. It definitely feels like a bull trap. That's honestly what it feels like. It's throwing off the 60-day cycle big time. But it's times like these that you need to make sure that you're strongly convicted in your investment strategy and that you stick to it. So, because time-based DCAs are absolutely perfect, and that's the way that you overcome a situation like this. But Zenith, go ahead.
Yeah, I was going to jump in there and talk about a little bit of the TNA that Jay went over. So specifically, the 200-day moving average, when I was looking at the chart, that was one of the first things I noticed as well. A bit of a grain of salt with that one, though, is that if you notice, if you do something slightly unkosher and you look at the 1-hour chart, I know, gross. But I think it's important because you look at the 1-hour chart, the entire gain for that last day's candle that just closed came in the last 2 hours. Notably, like seriously, in one 1-hour candle. And if you look at the volume chart, the volume for the entire day was just pretty nothing, massive. And again, no news events, so leads me to speculate there might be whales, but we're talking about Bitcoin here, and even $100 million doesn't even move Bitcoin that much in the grand scheme of things. I think I'm right there with everybody else, though, when we're talking about looking for a cycle low in October. that makes sense. And when we're trying to pick out potential cycle lows, if we go and look at the last one, we had a day 68 cycle low. So that was a bit of a right translated cycle. If you want to go to that local swing low, that would put you at 80 plus days. So
yes,
possible,
exactly.
but rather unlikely.
I'm not doing that.
I know. So I'm right there with you.
Yeah. So
I've been in Bitcoin. I've been in the crypto space since 2020, 2021. I think there's only been one period of time that I could remember that it was like an 80 or 90 day cycle.
Yeah.
And that was crazy.
Yeah. We had like I think we had close to an 80-day cycle sometime last year, but I don't think we got like, that's why I love that Zenith pointed that out, because I also tried to extend the last cycle to that swing low. And I was like, I'm not going to assume an 80-day cycle, bro. Like, it's just not fucking happening.
Yeah. Looking at it,
one more thing though that I forgot to mention to you guys. The last time we had a time-based low, if you want to check the chart, was actually at the end of December. So maybe we're due for a time-based low, man. Who knows? But I just thought that was funny. But hey, good point there, Zenith.
Hey Jay, can you just talk like 2 minutes real quick? I know you gave a little bit of an example. Could you just elaborate for like 1 or 2 minutes on time-based versus price-based? Because the majority of the time, you know, we will typically get price-based, but you know, there definitely are occasions where it's time-based. So just like a quick 1 or 2 minute, you know, expansion on that idea and the theory behind it.
Cool. Sure. I'm gonna since you asked for it, I'm actually gonna go ahead and show you guys the example for the time-based low back in December of 2022. It's gonna be a quick visual because it's pretty easy. It's a pretty easy concept to understand once you see it visually in front of you. Okay, so quickly, a price-based low, which is what I teach most people when we're talking about cycle theory, right? You're looking from a low from the last cycle, right? That's a price-based low from our last cycle to another price-based low, which marks the end of that current cycle, right? So you're looking at it from low to low. Do you see how both of these points distinctively, right? They're lower than any other price point on the chart during whatever cycle you're observing, right? So if we're talking about this cycle right here, that started from the 15th of June all the way to the 22nd of August, you can see that where this cycle started was the lowest point for the last cycle, and where it ended was also the lowest point in terms of price for that cycle that you're observing, right? Once again, you're looking at it from a price low to low, and the lowest point is a low price that's lower than any other time during the entirety of that entire cycle. Now, a time-based low, like we had right here in the middle, the end of December of 2022, right? This cycle, this 60-day cycle, which started on the 9th of November 2022, we had a price low only. Let me actually get my time-based tool here so you guys can see it visually. Give me 1 second. Let's see. Where is my... Oh, here we go. Right at my favorites. Right. So the lowest point in price that we got during this November cycle was here on day 12. Now, obviously, anybody doing cycle analysis is not going to say, okay, guys, we have a 12-day cycle, right? That's not happening. And we followed the cycle all the way until it ran up here. We had a cycle high right here on the 14th of December, day 35. And we had another low here on day 40. However, you saw that this low did not go beyond the low that we had on day 11 of that cycle, right? And some people might say, okay, we could probably stop here. However, if we extend it a little bit more, right here, day 51, which is where I clocked the end of this cycle, the price that we got here was only to 16,337, right? Which was even higher than the low that we got here on day 40, right? So we had two consecutive prices here. This price, which was the candidate for a cycle low, was higher than the lowest price point here in day 11. And this candidate right here, which is where I decided to place a cycle low in, was even higher in terms of price than the low that we had here on day 40. But if you can see, right, if I extend this cycle fully out, that creates a 51-day, 60-day cycle, right? And that's what I mean by a time-based low. We didn't look for a low in price, because if you were doing that, you would have clocked in the cycle low here, which was not the case, right? Or sorry, you would have clocked in the end of the 60-day cycle here, which nobody would do that, right? Unless you're a crazy person. And so we follow this 60-day cycle and look for a time-based low that would make sense within the context of the average number of days that we see of the cycle theory, right? Which is 60 days. So that's basically time-based lows in a nutshell. I know that might have been too much in a very short period of time. Let me know if that was clear to you guys, if you wanted me to clarify anything. But
No,
just a TLDR, price-based low is a low in price from low to low, and a time-based low, you're looking for an appropriate amount of time that has passed within the context of the average number of days of the cycle, which is 60 days.
And just a reminder for folks, the 60-day cycle, it's otherwise known as Lucas cycles, famous for being created by Bob Lucas. If you want to learn more about this specific topic, you can go check out his YouTube channel. Lots of content over there. And he is the father of this theory. So that's where it comes from.
Yeah. And, you know, at the end of the day, the Lucas cycle, the 60-day cycle, they're just like waves in the ocean. You know, for a large majority of the time, it's an observable wave, and you can see it coming and you can see it going. But just like with the ocean, there could be, external forces, whether it be weather, whether it be objects in the ocean, it could be time of day, you know, different things can throw off the wave pattern. And the same thing can happen when it comes to the 60-day cycles. But great explanation, Jay. And, yep, check out Bob Lucas's YouTube if you guys have any questions. Also, you guys can find Jay in the Telegram. So good opportunity to plug the Telegram. If you guys need more information on this stuff, make sure you guys are checking out the Telegram, and you guys are following us on social medias. And but yeah, definitely make sure you guys are in the Telegram. It looks like we lost Will.
Hey, Josh, beforehand, really quick, since we're on the subject of the Telegram, Dre had a question here about Coast. There are a few of our guys in the Telegram already, Dre, who have used Coast and has had good experience with them. So if you want to get a little bit more details about it, go ahead and ask in the Telegram chat, where we've got a few guys in there who are familiar with it, who can help you through the process. And then also, yes, Edwin Rodriguez. He's asking, oh, never mind. He found him, man. Good job using the old search bar there for YouTube. But yeah, man, he's a good resource. Aside from my mentor, Charlie, Bob Lucas is the other person where I learned a lot of the 60-day cycle theory from. So definitely very good resources, both of them.
Good stuff. All right. Let's go ahead and transition to the first story. Does that sound good? All right. Let's rock and roll with it. Give me 1 second here. All right. So Jay, I'm gonna go ahead and present it. Let's see. We got Coinbase. Coinbase completing registration with the Central Bank of Spain. So I'm gonna turn it over to you, buddy. Go ahead and introduce the article and start a monologue. Then we can start a conversation.
Yeah, bro. I was hoping you'd go to Will first, because I've been talking so much, my fucking voice is exhausted.
Yeah, I got it. I can go first. Fucking
no,
do
I
it.
got you. Yeah. Let we can go over to Will. That's fine. Yeah.
I'm like, the audience is getting tired of me talking, bro.
Yeah, it's cool. Yeah, Will, go ahead and introduce CHAINLINK, the CCIP, and introduce that story.
So for those of you who don't know, CHAINLINK is a hexagon-shaped icon, which is probably my favorite thing about it. It's just like Hex. Just kidding. So CHAINLINK is a protocol that connects basically just a whole bunch of ecosystems to each other, whether it's the Ethereum, the Arbitrum, Binance, Optimum. There's a whole fucking list of them. But anyways, CHAINLINK has been adopted on the COINBASE network, Base, which is the they've just recently launched. I want to say they launched on August 9th. But this is some interesting information, because it if Nate was here, man, he would go into the whole bit about why this feeds into the what's the name of the theory, like everything is coming together all at once and it's all going to fall apart because of one thing.
The perfect
man.
storm theory, brother.
Yeah, the perfect storm theory, right? So Chainlink is the chosen protocol for the World Economic Forum, the Swift payment system, the guys that want you to eat the bugs and be super duper happy about it. So it's adopted by like all those great and horrible bad guys that want us to lose everything. But anyways, Base has been powering Chainlink, or they've been paying the developers for probably about 6 months now. I think they've been covering the cost of development and everything. And so they finally just launched. So this is one more system to be added to the Chainlink network. And for those of you who've been watching the price for Chainlink over the past week, it's been going up and up and up steadily. And so like whether that is a result of this bit of news or also the fact that Chainlink is doing its very, very aptly named SmartCon this week over in Barcelona, Spain. I don't know, maybe sort of ties in with what Jay's got here with Coinbase being accepted in Spain or not. I got no clue there. But the cool thing that I wanted to focus on with this article isn't so much the Chainlink portion, but it's the Base portion. Like Coinbase is picking up more and more and more like market share of the cryptocurrency world, like as time goes forward. Like if it's whether it's them just being the oldest, or I think they are the oldest centralized exchange. Correct me if I'm wrong on that. But Coinbase is just getting everything, and Chainlink's starting to get everything, and it's all starting to come together in this great big old world full of stuff. Jay, you look like you got something there, bro.
Yeah, well, so a bit of a background for the folks that might not be familiar with the project. So Chainlink is actually, I guess the easiest way to explain it is they're trying to create a layer that exists underneath the layer ones, like Bitcoin, like Ethereum, Pulse Chain, etc., right? And so some people actually refer to them as layer zeros. And the function for layer zeros is to be able to connect all of these different layer ones to each other, right? They want to serve as a bridge, because right now there's absolutely no way for you to jump from Ethereum to Pulse Chain to Bitcoin. There's no easy way for you to do that, right? You usually have to use some kind of native bridge from that chain in order to bring over assets from one chain to another, right? A lot of you guys that watch us are very familiar with the Pulse Chain bridge, right? And that's the bridge that we use in order to bring our assets over from Ethereum over to Pulse Chain. And Chainlink and other networks like it, right? Other projects like it are trying to build something that exists underneath all of this infrastructure that are the L1s, in order for us to be able to bring information to and from these L1s in a much easier manner, right? One, quicker, and two, in a way that's a lot less expensive. Because I'm pretty sure that a lot of you guys here have experienced that when there's a lot of volume of transactions on the network, right? When it's really busy, that even those bridge fees, you combine the bridge fees, you combine the trading fees, you can buy, you put that on top of the buying and the selling fees, right? And if you're like, for example, if we're in the bull market and you had to add up all those fees and you were trying to move a significant amount of capital around, you're going to be paying several $100. I've heard of some people paying several $1,000s. Now, obviously, that might not be such a big deal in the context of tens of thousands, hundreds of thousands of millions of dollars that you might be moving during the bull market. But I mean, it's still like you work for that money, right? It's like you did the research, you invested in the token, you made the risk, and so you want to be able to keep as much of that capital as possible, right? And so you don't want to be able, like, you don't want to have to deal with paying all of these fees. And so something like Chainlink, right? Something that connects all of these different ecosystems together could serve as a way to reduce those fees, right? And a way for them to communicate, right? So you don't have to go back and forth in such a roundabout manner in order for you to get from one network to the other, right? Can you guys imagine, like, let's say there was no internet and there was no phones, right? And we were trying to get a message from the US, like, or let's I'm gonna use myself as an example, right? I'm trying to communicate to my family back in the Philippines. Like how much of a pain in the ass would it be for me to get a message across, right? I'm gonna have to use what, a messenger pigeon, right? Or like, right?
That's-
So it'll be a really big pain in the ass. And so things like Chainlink, right, is really important for them to succeed because it's going to make the communication aspect, right, back and forth between all of these different ecosystems a lot more easy, a lot more streamlined, a lot faster, and a lot cheaper. Kind of like the same way that the internet makes allows us to communicate with each other much easier.
So there's that. So it not only makes things cheaper, but my understanding is it also eliminates a lot of the risk that comes with bridging. So like, the bridges get hacked a shit ton. Bridges are like one of the number one points of failure in like the cryptocurrency world, as far as like people taking money from other people. If you don't have to bridge assets from one chain to another, and you can just use a Chainlink Oracle to give you like price feeds or something to that extent. I'm not entirely sure if Chainlink makes bridges obsolete or this, if it bolsters the security aspects of not having to use bridges or not. I think that I think that would be quite interesting if that ends up being the case as well, not just like a function of price, but also a function of security.
I've often argued that I thought projects like Chainlink and Polkadot, I think they came out a little too soon. Do you guys think we're getting ripe for the time period where it's starting to click, where, because complete interoperability, the ability to do that has been proven super difficult for the last decade.
Mm-hmm.
So, it's like I said, with projects like Polkadot and with Chainlink, the idea is there. It's just the ability to apply and the ability to adopt. I think they were a little bit too soon. Do you guys think we're coming to a point, especially in this cycle, where it might be a little bit more valuable to start considering those for investment, investment vehicles and stuff like that?
I think it might be about.
Go ahead.
Thanks. I was gonna say, I think it might be about time for that. One of the things the article points out is that this is a bit of an iteration on the technology itself. So previously, we've been very used to having like ERC20 tokens, which is just Ethereum wrapped tokens, which is just a bit of Ethereum wrapped to look like something else that it's trying to encapsulate. Versus what this is doing, it's actually trying to find ways to transfer things through smart contracts, either natively or basically lock up or destroy coins on one chain and at the same time mint them on another. I think personally, this is a bit of an evolution in the way that we do things. It might not be the final solution or a better solution, but it's innovation. So I think there is some opportunity there.
Yeah. No, I agree. Does really good point, Zenith, right? So if you guys can visualize this. So I'm going to use Pulse Chain again as an example because a lot of our audience have experience using their bridge. So when you transfer your Ethereum, right, or your USDC or whatever it is asset that you like, and you're transferring it over to Pulse Chain, right? What Zenith said, the bridge, which is a contract, wraps that token in such a way so that your asset can be recognized and used in the Pulse Chain ecosystem. So what Chainlink is trying to do, and other protocols like it, is completely do away with the wrapping mechanism, right? You know how when you can send, like, let's say I have assets on Coinbase, I want to send it over to my MetaMask. All I got to do is scan a QR code, and then it sends it, and it's in my wallet within a few seconds. That's basically what I'm assuming what Chainlink and protocols like that are trying to accomplish, right? They're trying to do away with the wrapping, which is an extra step. It increases your attack surface, and like the variables that I spoke about earlier, right? It increases the amount of time that's needed. It increases the fees associated with it, and it's just a whole lot of effort in order to just be able to get your assets from one place to another, right? And so, unfortunately, we have to use those protocols because it's really the only options that we have currently. And so, the success of companies like Chainlink is actually, I think, pretty imperative to being able to get more people within the traditional financial space and just your average retail consumer in general. I think protocols like Chainlink are going to be important in that aspect because people don't want to have to go through all of these loops just to get their assets from one place to another, right? Because it's a big fucking pain in the ass. Now, to Josh's question, I think yes, when Chainlink and Polkadot came out, the first when they initially came out, I think the technology was obviously a bit too early, right? Because one, the space was much smaller, and two, the technology just hadn't caught up to that degree, right? And then nobody was really interested just quite yet in using it. But now, because we've had a mass exodus of people moving from the traditional financial space into cryptocurrency, now I think is the time where you need to be a little bit more. You need some. What's the word I'm looking for? God, my vocabulary is escaping me. But you need to have some initiative, right? And so that's why I think Chainlink is making a good move here by partnering with Base, because as I was speaking, I was talking about this with the guys earlier. Like Chainlink is running away with the users in terms of the layer zeros. So I was an investor in Polkadot very early, right? I've since exited the position, but it was the other main competitor to Chainlink that was trying to provide this CCIP, right? This cross-chain interoperability functionality
Protocol.
to layer ones, right? And so I was very interested. I was like, I'm hearing a lot of stuff about Chainlink, but I have not heard a peep from anybody in Polkadot, bro. And so I just I did some quick reading on what Polkadot has been into, and there was one article recently published about a guy who was also interested in the same thing, and he was trying to go over the metrics. So I'm gonna give you guys some quick tidbits here about exactly what's been going on at Polkadot. All right, so number one, Polkadot had a really weak rally earlier this year, right? For the most part, it's been down and to the right for the majority of the year, and it's still currently trying to find its lows. Now, Link, right, is just sitting 2x already, like from its lows, which it seemed like it's found earlier in June. And then to kind of like make matters worse for Polkadot, their social media engagement is down. The activity on the actual Polkadot network is down 19.9% over the past month, and their revenue is down 13.3% within the same time period. So it's not only reflecting in their charts, it's reflecting in their social media engagement across every platform. And you can look, Polkadot actually tried to get some engagement from their followers. I think this was on Twitter, right? They were trying to promote some kind of like new service or some kind of new activity that you're doing on the network, and it was a fucking ghost town. So it seems like Chainlink is pretty much pulling ahead of Polkadot in terms of this race to see who can be the first layer zero to provide for all of these major platforms.
I got a couple points that I want to bring up. Then I want to pose another question. So Chainlink launched its cross-chain NOP protocol back in February of 2023, right? And I've already mentioned how over the last decade, it's proven extremely difficult to get complete interoperability across blockchains. When you think about Coinbase, or when you think about Base, Base is new, but it still packs a heavy punch in brandability and like popularity because it's centered around Coinbase. And what Coinbase is doing, creating sort of that all-in-one solution, blending a centralized exchange with a layer 2 blockchain and all that different sort of stuff. I think Base is hitting on all the gears at the right time right now, and especially with plugging in this Chainlink, partnering up with Chainlink and plugging in this protocol into the layer 2 blockchain. So when you think of those sort of aspects, if the layer 2s do become the predominant theme in this bull cycle, how much does this bear market preparation that Base is doing along with Chainlink, how much does it set them out? How well does it put them out in front of the competition, so to speak, to sort of be, the front runner for this coming bull cycle?
Could you condense that question a little bit?
Josh, you're muted, brother.
There we go. Yeah, I was muted. I got it. Yeah, I got it. Yeah, that was a lot to put it together and then ask a question around. So I'll simplify the question. Number one is, does with the explosion of layer 2s coming up, in this bull cycle already, with the explosion of layer 2s, number one is, do you think that that's going to be one of the predominant themes in this bull cycle, is layer 2s? And if layer 2s is the predominant theme, how much does this set base up to be the leader in the L2 race for this bull cycle?
I've got no idea what the story is going to be for this cycle. There have been a whole lot of layer 2s popping up, so I could definitely see that being the case. And I think that there is an argument to be made that base is going to be a strong runner just because it's, tied so closely to COINBASE, which is, just one of the biggest exchanges. So I think that it is certainly possible. I don't know, because I'm not terribly in the weeds with all these things, but I could see that campfire story, that narrative playing out to holding water and whatnot.
Just taking a quick look at, I needed a refresher on this one, I will fully admit. Just looking at the layer 2s by market cap, we got Polygon at the top with about 5 billion, Arbitrum below it, along with Immutable X, each at 1 billion. And then we got Mantle, Synthetics, and Optimism. Optimism down there at about 300 million. And then after that, it just drops off pretty quickly. So ask yourself, do you think the base blockchain is going to do better than all the ones that I just listed that have been around for a little bit, also have some pretty good layer 1s with them? It's possible. It's entirely possible. Like we mentioned earlier, Coinbase has absolutely become a giant in the centralized exchange world, especially here in the United States. So that, I think, is going to be a big boost to it. However, personally, I still think this next upcoming cycle is going to be a little more focused on the layer 1s. So most notably, it could be because I'm a bit of a Pulse Chain maxi. I think Pulse Chain has a lot of room to go, especially once Richard Hart clears up everything with the SEC. Additionally, I think you have chains like Phantom that they have tons of upside, and a lot of the potential is just untapped there. So personally, I still see the layer 1s being the focus, but layer 2s could absolutely sneak into this race and start stealing the show a bit towards the end.
Yo, I wanted to point something out there because Zenith brought out the market cap. Now, I'm surprised. Don't you? So I'm pretty sure Zenith has heard this because he's a Pulse Chain maxi, or maybe no, maybe he's a Pulse Chain maxi and just happens to be not a Richard Hart maxi. But bro, have you heard him say Richard Hart said this a lot, that market cap is a vanity metric? Doesn't really mean a lot.
I mean, yeah, it's basically just a dick measuring contest. Besides, I'm also using Richard Hart's least favorite website for this, Coin Rankings. So, yeah, he would not be happy with me. But hey, I just needed a quick reference, and there we go.
No. I wasn't doing that to kind of bag on you. I was just trying.
I know.
I was mentioning that to elucidate a point, right? Because market cap is actually pretty important, right? I'm not saying it's the be all end all, but I think it's one of those important variables that you do need to consider when it comes to investing, right? The market cap of a coin is very important, right? Because if you're somebody who's looking for the next big opportunity where you can make a ton of X's, you're not going to look at a market cap that has a market cap close to Bitcoin, right? That's just fucking silly. You're not going to get the excess that you're going to get from Pepe on day one versus Bitcoin 10 years into its cycle, right? So in that extent, market cap is a pretty important metric to look at. What I was alluding to, though, was when you brought up the market cap numbers, I was thinking to myself, well, Base is not going to be on there because Base and Coinbase, they don't have a ticker, right? They have a ticker in the stock market, but they don't have a ticker they don't have a token. They don't have a crypto asset, right? They're just a layer 2. What I do want to point people out, right? And maybe you guys have comments on this. Have any of you looked at the activity on Base on DeFi Llama? A lot of people were expecting Base activity to die down after the initial hype around it, man. But I'm not going to spoil anything. Look at where Base right now sits in terms of rankings on DeFi Llama. Those of you who've been fucking with Friendtech probably knows exactly why that's happening. It looks like Zenith's looking up DeFi Llama right now.
That's exactly.
I'm trying, brother. I'll be honest. This is my first time on the website. I don't entirely understand the data. So August, we're looking at what, 0 total value locked, and then in September we have about 400 million in total value locked, and we've gone down a little bit. We haven't dropped below 350 million total value locked.
Yeah. So what basically what so if you guys look at DeFi Llama, a lot of people were basically looking at the amount of volume of transactions and the amount of dollars basically moving in and out of that system to decrease significantly after initial hype was after initial hype died down. But it seems like Base has a lot of wind in its sails, and their volume of transactions and the money going through that system is not slowing down. Right? It's still pretty high considering that when you have a new protocol, like whether it's a layer 1 or a layer 2 first launch, you're obviously going to see a boost of activity and transactions on the protocol because everybody's been waiting for it, right? But then you expect it to die down, right? I'm sure a lot of you guys who are fans of different stuff like Optimism, like Avalanche, like Arbitrum, like look, these are great protocols, but the amount of volume going through these chains is like when you compare to Bitcoin and Ethereum, they're like you can't even compare the two, right? And Base, as a layer 2, they've still like the amount of people using their platform on a daily basis is still pretty high. So it's not dying down the way that people thought initially, which is what I was kind of like what I wanted to point out when Zenith brought up the market cap, because in that sense, the market cap was a vanity metric. What you needed to do was, are people using the platform? Are people transacting on the platform? And are people getting involved in it? And it seems like Coinbase is.
Yeah, it's looking like they're just under. Ah, shit! I just had it pulled up. They are just under Avalanche and just above Solana. Base at 0.92% of total value locked on all chains. Oh wait, no, we're not looking at total value locked. We're looking at transactions, right?
Yes, sir.
Never mind. I was looking at a different thing.
Yeah.
Hang on. Go ahead. Keep talking. I'm in the wrong spot on the
a lot of people are thinking it's because of Friendtech. Have you guys have explored that? That social media thing.
Yeah, that's like basically you shit. It's like you put some sort of value behind someone's like Twitter account or something like that.
Yeah, you can buy and sell your account and shit.
Twitter stock. Yeah.
Mm-hmm.
Yeah. So if you know someone who's going to be like an up and coming Twitter-rooney member, then
yep. Yeah, you could monetize that a lot easier. So that's a neat little thing, right? It's because I've known of like offhand of other companies trying to start Web3 social media, but a lot of them have kind of lost steam and has just been lost into the void, right? You never hear from them again. And then you hear about this Friendtech stuff that's being built on Coinbase, and it seems like it's getting really popular, and it's also not losing steam. Whether it can maintain that momentum, who knows? But here's the thing, right? At the very least, I've heard about it, and I know people are talking about it versus all the other ones that have just been kind of lost into the void.
I'm curious to know, Zenith. You think that this upcoming cycle is going to remain the focus is going to be L1? That's what you think?
Yeah, I still think a lot of L1s are going to be the focus. I think what's going to happen at the end of the cycle, notably, is we're going to get the death of a lot of L1s that don't quite make the cut. And then after that, once we have that big culling, that's when we can start really seeing layer 2s compete. Because what it looks like to me on the market is, if you look at it, is there's a lot of layer 1 chains that have their own layer 2 chains. And what I see with upcoming competition between layer 2s is that there's going to be actual competitive spirit on the same layer 1 chains. It's basically right now everyone's still kind of like going for the layer 1 space. Having a layer 2 is a bit of added bonus on top of that. But once we figure out kind of who the winners and losers are in the long term, the layer 1s, then people can start competing for that spot on layer 1 chains as the big one, or a very specific or niche layer 2 for those chains. So I mean, it might be a little, this is all very theoretical and highfalutin and out there right now, but we gotta get through the bear market or the bull market first before we start thinking about the layer 2 stuff, in my opinion.
So is your theory that this last cycle was sort of the birth of the L1, and now this one is going to be the maintaining and the solidifying, so to speak? I guess what I'm asking is, do you think in order for a successful L1 to, to looking forward, do you think the most successful L1s have already been created and are already in use? Or do you think it's still time for brand new L1s to be created this cycle that could still succeed?
I understand that some of these chains are a little bit older than I am, so I'm going to do my best here. So Bitcoin was the original L1. Then after that, we had Litecoin was another notable one. Crap. Ethereum is obviously another massive player. Right now, if you ask me what the two largest chains are, I think it's pretty obvious. It's Bitcoin and Ethereum. Ethereum has been around since 2015. So we're 2013 now, which means it's been around for 8 years, which is basically 2 full cycles. A lot of the other L1s, you can't say that. So I think once you start making it past that second cycle, you start getting a lot of that validity and a lot of the staying power, and you start being that mainstay focus. So like personally, when I evaluate the chains, I say Bitcoin is the 99.9% chance of sticking around. It's the original decentralized blockchain. It's the OG crypto. And then after that, we have Ethereum. Ethereum, I have probably like a 95% chance of it making the test of time and sticking around. The big reason I say that is because it developed the smart contracts. Then all the other ones, we got to figure out what they're actually adding value wise. So I mentioned it earlier, Pulse Chain and Phantom. I like those two chains specifically because they do a good amount of effort to solve the Ethereum problems. Obviously, they're pretty close to Ethereum. Well, Pulse Chain anyways, because it was literally a direct copy. It tries to reduce the gas fees and it reduces block time, versus Phantom tries to actually improve on the tech, improve on how much data is needed to store it, and then also try to create their own virtual machine that is able to kind of like split the timeline, so to speak, run a bunch of calculations, and then reintegrate it to help reduce on costs. Did I answer your question, or did I just ramble?
Yeah, I mean, I agree totally with Zenith, bro. Like, I think so. I know Coinbase kind of made waves with this layer 2. I think they're actually being smart, because I completely agree with Zenith. I think for the majority of the cycle, it's still going to be a focus on L1s, not because there's going to be a lot of new L1s that people are going to be paying attention to. I think people are going to be paying attention to the L1. Right? That's going to be Bitcoin. I know a lot of people don't want to fucking hear that, but you have to consider the fact all of the attention right now is on Bitcoin, because all of the big asset managers are funneling their capital into Bitcoin, right? Now, obviously, you also have to factor Ethereum in there, right? Because it's also another big L1. But in this cycle, people are going to be paying attention predominantly to Bitcoin, and then Ethereum is going to get the majority of the attention afterwards. And anything else, I think we're going to have that trickle-down economics, right? Where money from the biggest gainers are going to flow into assets that are higher in the risk curve, that have lower market caps, that have more potential for excess. But I agree with Zenith. Like I said, I think this is going to be the story of Bitcoin and Ethereum, and how those two get more mainstream adoption, right? Especially if we get some regulations over the next few years. I don't know how that's likely, though, because Gary was like 3 to 5 years before we got any strict regulations. I was like, this boy mad. Mad man.
Good stuff. All right. You guys want to go ahead and transition?
Yeah, the subject of Coinbase. Let's talk about Coinbase.
All right. Jay, I'm going to have you come on mic again. Let me remove this and tell us about Coinbase coming to Spain.
Yeah. So here's the thing I know people might not be a fan of Coinbase, but you can't ignore exactly the types of moves that this company is making. Like I said earlier, right? They're setting themselves apart by not competing with Bitcoin and Ethereum. They're saying, look, man, we want to support Ethereum and build on top of it. And we're going to be the layer 2 solution for Ethereum. That's number one. Also consider the fact, like we've spoken about throughout this episode, look at all of the different pieces that Coinbase is collecting. They're not only collecting different exchanges, right? Because obviously Uniswap is on there already. They're also collecting other components that would help make them successful when we're really at the peak of the bull run. One of them, most notably, is that layer 0, like we were talking about here earlier with Chainlink, right? And then here's another cool thing, and I really want you guys to consider this, okay? Here in the West, a lot of what's been going on in the past few months with the news cycle is basically us bagging on Gary Gensler because every single time he makes some kind of testimony in front of the Senate, in front of Congress, it's like he repeats the same old song and dance. For those of you guys who you probably already know, I'm a pretty big fan of Ivan on Tech, and he replays this clip of Gary every single time he testifies. He says the exact same things. The crypto is rife with fraudsters, scammers, hucksters, and then he remixes it into a song. And Gary Gensler basically comes out and says the exact same thing over and over and over. And the news cycle here in the West is basically us trying to navigate around him and the SEC. Right? We're looking towards, okay, what are our politicians doing in order to create some kind of regulatory framework for Bitcoin and Ethereum and the broader crypto space? Like what are companies doing in order to try and navigate around Gary and the SEC? That's basically a lot of the major news cycle that happens here in the West. And so it's really uplifting to hear when you see companies like Coinbase that they're actually doing something really great for the space, and they're starting to branch out in other countries, right? And this is exactly what this article is about. They just got their license to basically do business in Spain. I'm going to go over a few of the key points in the article with you guys right now, because I think this is a TLDR. These are really important, and these are really important things to consider when it comes to Coinbase and the crypto space moving forward, right? So their registration in Spain, it completes a mandatory step for the firm to comply with the country's anti-money laundering laws, which is important, right? Because in order for you to be able to do business within that country, you have to have systems in place that tells that country, okay, here are the steps that we have in place in order for us to avoid things like money laundering, like scams, so that people in your country that are investing within your company or within your token don't get rugged and don't lose all their money, right? And then number 2, Coinbase is now allowed to provide exchange and custody services in Spain. In addition, right? So they have the custody and exchange of assets, right? So that's buying and selling those assets, trading against those assets with each other, and then also being able to buy and sell those assets in legal tender, whatever currency that Spain uses, right? That's number 2. Number 3, in addition to Spain, and this is really the kicker, right? And this is why I'm encouraging people, you really have to pay attention to what Coinbase is doing, because like I said, they're making moves outside of the United States. And here's the thing, right? So in addition to Spain, Coinbase has completed the VASP, which is the Virtual Asset Service Provider registration in Italy, in Ireland, and in the Netherlands. And then they have principal approval in Singapore, in Brazil, and then in Canada, right? Now, here's why that's important. The EU is composed of 27 different countries. And the 4 that I named earlier, which is Ireland, Italy, and the Netherlands, right, including Spain, that's about 15% of the entirety of the EU. And the EU make up about, I think it was 1/5, please correct me if I'm wrong, 1/5 of the total world GDP. And they already have license to do business in 15% of the countries within the EU. And they're not stopping there. I guarantee you right now, they're working on acquiring a license in every single country that's part of the EU, right? So when you look at the totality of what Coinbase is doing, both here in the West and overseas, it really is important to be paying attention to them as a company, because I guarantee you, once a token is released in the crypto space with a ticker associated to Coinbase, that is going to go through the roof, man. Because whether crypto succeeds here in the United States or not, I don't think obviously Coinbase cares, But for me, seeing them make all of these different moves in other countries is telling me they might be trying to put a hedge in place just in case things don't work out here in the US. And so that they're making sure that they have roots dug down deep in all of these other parts of the world where crypto is now being adopted. Now, as a final note, I do want to let you guys know that this is on the heels of the EU adopting the of MiCA. I think it's pronounced MiCA, right? Which is basically the European nations regulatory framework for the US. For crypto within the European group of nations. And I'll link the MiCA agreement for you guys in the Telegram if you want to read it. But this is a pretty comprehensive legislation that outlines exactly what companies need to do within the EU in order to do business in there, right? And that's certainly something. It might not be perfect, and a lot of people might have issues with it, but it's something to start. Versus Gary Gensler over here in the US saying, no, we're going to be anywhere between 3 to 5 years before we have any clear regulatory framework for crypto here in the US. The EU already has one, and that's MiCA, right? And so that's the final note that I want to kind of put on that article. I want to go ahead and open it up to the rest of the panel, our audience in the chat. Do you guys have any questions or comments about what Coinbase is doing, not just in Spain, but in all of these other different countries outside of the US as well?
Yeah, I want to piggyback off of what you said. So Coinbase users, they grew 42% in the bear market in 2022. All right, keep that in mind. Coinbase grew 42% in 2022. All right, they are now in third place behind Binance and Cash App. All right, in revenue, that is. So we're talking about in total revenue. All right, they are third place behind Binance and Cash App. And back in March, that's when Coinbase went on their expansion spree. It was a 8-week international expansion drive that Ben Armstrong, was sort of passionate about. And their goal is to get onto pretty much all. Of course, there are 7 continents, but there isn't really too many people living on Antarctica. So, but what their goal was is to get on 6 of the 7 continents. And when you look at the explosion in annual transaction volume that Coinbase has gone through. So in 2020, their annual transaction volume was $195 billion. All right. And that skyrocketed in 2021 to $1.65 trillion. Okay. So it was 195 in 2020, 195 billion, and it skyrocketed to $1.65 trillion. Now, here's the kicker also. Okay, listen to this point X's? As well. Right? Here's a lot of X's, man. Yeah, it is. Here's something also to keep in mind. In 2022, sure, the transaction volume came down, okay? But the transaction volume was still greater in 2022 than from 2020 or from 2017 to 2020 combined. Okay? So that transaction volume in 2020 or in 2022 was greater than from 2017 to 2020. All right. So it's like we're going here. It shoots up in 2021. It corrects down a little bit, but it still has a greater annual transaction volume than 2017 to 2020. So that's like
3 years, bro. 3 years where they basically beat every single record they set those 3 years in a bear market, bro.
Yeah, for sure. So 2 questions popped into my mind when I, was reading and researching and understood all this. Number one is eToro is the leading exchange in Spain for cryptocurrencies. How soon is it going to take Coinbase to take the number 1 spot? All right. And number 2 is that with Ben Armstrong's aggressive expansion drive, plugging into 6 of the 7 continents, how imperative is it for U.S. lawmakers and regulators to work with Coinbase instead of against? So I'm going to open those 2 up if you guys want to answer both of them, if you guys want to only answer one of them. What do you guys think about that?
I'll jump on this. So I think our good friend Will here, he labels himself as peanut brain, but he had an absolute diamond brain comment earlier. It says, everything in life is a contest and competition. Everyone and everything. Sometimes you can make money by attaching yourself lamprey style to successful things. So this story really demonstrates 2 things. First, it demonstrates a a good win on Coinbase's part. And secondly, this is really just a big loss for the United States in two ways. So first off, Coinbase expanding, fantastic. Working with tons of international communities, also fantastic. Really just growing the sphere of influence. On the United States side, this is a failure in two ways. One, you are actively discouraging the crypto market, specifically centralized exchanges, from operating on your own soil. America has led the world for nearly the last century. And personally, I'm an American, and I would like to see that continue to happen. So you can almost look at this as a foreign policy thing, which is we are openly giving this opportunity to the rest of the world to capitalize it, when really we could be the ones that capitalize it ourselves. Second, this is a failure on the United States parts because what's happening is that they're working with other nations to create legislation for those nations on how that company operates. And if you adhere to the there's nothing new under the sun theory, which is that we're all just going to crib off each other anyways. So what that means is that if you want to create your own legislation, you're probably going to look at someone else's legislation that's working effectively and then just borrow what they're doing and put it here. What that means is that the United States does not have a hand on the steering wheel when it comes to creating the rules here. We're just looking to other people to see what they're doing, and we're probably just going to copy them. So that's what I got,
bro. Yo, oh my god. So I don't know if you read anything about Mika, Zenith, but this was in the article, bro. They were talking about how there's this thing called the Brussels effect, right? Where corporations usually like to act under a single set of foundational rules. And they were talking about how because the EU was basically the first major group of nations to adopt this legislation for crypto, that everybody else is going to be looking to them in order to create their own set of regulation. So you're right? That's an L for the US in the sense of they're losing that first mover advantage. Right, because now if this is successful, obviously, like I said, right, there's still some things to iron out. Mika is very unclear about how NFTs are going to work into that regulation. They're going to update the regulations mid-2025 if they see that there's a need to basically place addendums specifically for NFTs. But for the most part, it's pretty comprehensive in what you need to accomplish in order for you to be able to do business within the EU. There's stuff for stable coins. They're like for specifically for stable coins. I thought it was really interesting. They said that any company here that will have a stable coin needs to prove that they have sufficient reserves in place so that customers can fucking see that you're not going to rug them, right? So I thought that was pretty freaking cool. They have things in place in order to prevent like fraud, like money laundering and stuff like that, which I went over earlier in the article. And so, and another thing, the Mika regulations are an offshoot of the EU's regulations that exist for securities. However, it wasn't a copy and paste type of regulation. What they actually did was modify it in order to fit the needs of the crypto space. And so when you take all of those things into consideration, all right, is it going to be perfect? No. Are they going to need to create some modifications along the way? Absolutely. Are they going to get some things wrong? Absolutely. But the fact that they have something in place to provide people a step-by-step process on what you need to do in order to do business with us and our people, that's a pretty damn good start. And other countries are now going to be looking to them for guidelines instead of looking to us. And I'm with Zenith, man. I'm an American. I like America. I like it better than my country. Hate me if you want to. Okay, I'm from the Philippines originally, but I like America way better. I would like us to stay in the number one spot.
America has been the greatest force for good in driving economic innovation for the last century. I'd like to see it continue. Call me biased, but deal with it. America till the day I die, baby.
America number one, baby.
I agree. It's pretty cool. I think there's a lot of problems that America needs fixing, but you cannot argue your point there, Zenith, that America's been driving innovation in the world. I think that Silicon Valley, in combination with like we did the industrial revolution, we fucking like cranked the world out on that one. We were not at like, and I might be just mixing up a whole bunch of macroeconomic stuff here, but we were not like destroyed financially as a result of World War I and World War II quite the same way Europe was. So we had a nice big old advantage there. Is that correct, Josh? Am I getting that right?
Correct. The United States was pretty much the only country to actually gain status as a result of World War I and World War II.
Yeah, so we got that, and we've got the Silicon Valley. We had the Industrial Revolution. The United States has just been the the forefront leader in these realms for a long time, and I would like to see that continue. And if we don't do something here, I don't know if regulation is quite the answer, but that's my Wild West yearning speaking. But like if the United States keeps pushing crypto out of its borders, and they go to places like, you know, where things are nice, like in the Bahamas or over in Portugal or over in, I don't know if El Salvador is a good example, but like if regulations and well, not regulations, just it being a hostile marketplace for business creators and entrepreneurs and innovators and stuff here in America, keeping and pushing United States out of like the crypto relevancy portion of the world, and then, you know, places like the European Union come up with this planned system. Like, it, I don't know if it's good or bad, but they're doing something that's saying, hey, we're pathfinding right now, we're paving the way. I think that's gonna benefit the European Union with cryptocurrency a lot more than the United States is, anyways. I'm looking up if Portugal is part of the European Union, and so I know that Portugal is one of the nice, like, run off and take your crypto to these places, states, or not states, countries for a while there. So we'll see if this MiCA regulation has anything to do with making Portugal a little bit less of a dreamland for those wishing to evade all the taxation and all the cool stuff going on with crypto. But I suppose we will see then, won't we?
You guys think that? So that was actually a really good point that Will and Josh brought up. Do you guys think that because we've had a considerable amount of cushion that allowed us to move ahead when all of the other countries, like, you know, countries involved in the European nation, we're still trying to recover from the devastation from the effects of like World War I, etc. Do you think that us as a country, because we've had that cushion and we didn't have to struggle as much as these other countries, you think that we just got really comfortable, and now that cushion is slowly but surely starting to dwindle, and that we're everybody is not really pulling ahead, but they're getting close?
Josh, please correct me if I'm wrong on this one, but the story with World War I and World War II, I'll get to that in a sec, is World War I, the U.S. was initially out of the fight for the longest time. However, they were looking to provide economic opportunities such as warships and supplies to anybody that wanted to come purchase it. Then we had the sinking of Lusitania, which helped drive the U.S. into World War I. And then similarly in World War II, we had the Lend-Lease Act, which was, hey, we'll do the same thing. You just got to come pick it up. So what that did is it just created a huge economic incentive to help fuel the original military-industrial complex, which was not for us necessarily, but for the people that were just bombing the crap out of each other over in Europe. And then even after World War II, you look at it, we are the major country that fought the war and didn't also fight the war on our own soil, which ended up with just entire cities being leveled, decimated, and having infrastructure just demolished. As a result, following the war, just set up for success and just a massive boom. And again, just leading the world because we have everything in place. We've been capitalizing on opportunities, and we didn't get just schwacked by war on our own doorstep.
And it might just be that that America, being like essentially the world's weapons dealers, is what has just given us this fantastic boost in the economy, and like in our economic power and our ability to just like be the greatest innovation like country pretty much ever. Like Smedley Butler was writing about the fucking, like, he was a commandant of the Marine Corps way back in the day, like I want to say during Korea, if I'm not mistaken, but he wrote a book called War is a Racket in like the 1950s. Eisenhower warned about the military industrial complex. Fucking there's been a ton of people talking about the military industrial complex and the United States just obsession with war because it makes money and it spurs innovation. You know, so like whether you think that's a good thing or a bad thing, that is a thing that the United States does, is we get into lots of wars and we make a boatload of money off of it. Jay, you had a question earlier. What was it? And then Josh, go ahead after Jay's question.
No, I was just wondering, since you and Josh mentioned the fact that the United States, because Zenith actually brought up a really good point, that because they weren't really involved, they were several degrees removed from a lot of these different events, right? What they were doing was instead being a broker dealer for the weapons to provide to all of these different countries who wanted to fight each other. And so for a considerable amount of time, not only were we making money off of that, but we also weren't really involved in it, which allowed us to not be as devastated and to have an advantage after the fact, right? And so do you think that because we've experienced a pretty good amount of time where there's not really any major wars going on that's making us expend all of these different resources, that we're losing our edge in a sense, and that the advantage that we had, right, that we built up all those years, we're starting to slowly but surely lose it?
Yeah, I mean, there's no question that the giant head start that excuse me, that the giant head start that the United States had post World War II, because in a lot of ways World War II was just an expansion, and it was just a carryover from World War One. When you think of the geopolitical
Treaty of Versailles.
Yeah, when you think of the geopolitical stuff that was going on post World War One, it was really one war just separated by, about 20 years of peace. And really, you can't even say there was too much peace, because smack dab in the middle of that was the Greatest Depression that the world's ever seen before. But on all ends, yes, America definitely developed. They harnessed a head start well beyond the field, and it's not so much. In some ways, America is like we're running out of. If you think of an endurance runner, you know what I'm saying, starting to slow down a little bit, but I think it's more so other countries are starting to accelerate a little bit faster. I think that the head start that we had, because, look, in a lot of ways, World War I, it started in 2014, and it was Germany, France, England, and other countries that were involved in it as well. United States didn't get involved until 2017. All right. 19. And then even in 2017 is when they got involved. And then 2018 is when. Yeah, I'm sorry. 19. Yes. Yeah. I don't know why I'm over here saying 20s. Yes. 1917 is when the U.S. got involved. Yeah, for sure. Yeah. So 1917, the U.S. gets involved. And then this, that, and the other. And then the Treaty of Versailles, of course, pins the blame on Germany, which causes hyperinflation in Germany, and, chaos throughout France and chaos throughout Britain, because not only did they lose people, but they lost land as well. We're not really so much in Britain, but more so in France. And France and Britain were, they were pretty tight allies at the time. But even in World War II, Germany had already lost its steam by 1942, 1943 at the latest. A lot of people don't understand that the German Third Reich was at its prime right when Hitler decided to invade Russia and start the Eastern Offensive in 1941. That was like the peak. When Germany is, flooding towards Russia, and they get into the Stalingrad area, and then they start to outstretch their defense lines and everything like that. That's when you start to see the downfall. And in a lot of ways, it was the Soviet Union's defeating of Germany. Of course, the war still continued for another 2.5, 3 years. But by that time, the United States gets involved. Of course, we had Japan going on too in the 1942, 1943 timeframe with the island hopping campaign. But for a vast majority of both wars, the United States came in late, and the only real thing that the United States lost was people. Now, of course, that's terrible, right? But especially in Europe, which was the world's, London was what New York is today. London was the center of the world when it came to economics at the time, and that had to endure, and it suffered through the bombardment from Germany in 41. And, you had devastation across France, you had devastation across Germany, and across Europe in general from this war. You had devastation in Africa as well. The United States is really the only place that had that intact land, and it had that business mindset during both wars. to where they were involved with lending and being businesses and, being business lenders and arms dealers throughout both campaigns for the entire time that it was running, but their involvement wasn't until late. So, but that economic impact that the United States was able to develop was definitely a head start that I think it's starting to run out, you could say. Does that answer the question in a roundabout way?
Yeah. No, I mean, you definitely needed all that context, in order to be able to understand exactly why the United States was able to develop not just the kind of power that it currently has, but also why it wasn't as devastated as other parts of the country might have been that were much more heavily involved in the war. Because like you mentioned, right, not only were we providing the resources to both sides in a sense, but we were also we didn't have boots on the ground, like you mentioned, until late.
To even extrapolate further off of this, World War II was an absolutely world-shaping and history-shaping event. After that, I think, is when we really started going into the modern era of how conflict started to evolve. Granted, we had the Korean War right after, and eventually we had Vietnam, and I believe the French were in Vietnam before the U.S. even was. So those were really the last massive at scale ground wars. I mean, sure, we had some of the stuff going on with Desert Shield, Desert Storm, the Iraqi war, but that was very quick conflicts. But most notably, what happened was this became the era of constant low-level skirmishes and warfare, basically summed up in the Cold War. What that does is it creates incentives to constantly just spread the production around, constantly have the resources and the innovation and the technology, just with all these military giants, that eventually the technology is so useful that it will work its way down to civilian hands. I want to say one of the original inventions of digital GPS was so that you could tell if soldiers got blown away by IEDs, because you could detect movement by more than 10 or 15 feet. Somebody please correct me if I'm wrong on that.
It's funny that you mentioned DGPS. My father actually worked on the creation of DGPS for the Coast Guard. I used to brag to my friends, tell them that he invented GPS, but I didn't understand it at the time. But it's just I think DGPS in the Coast Guard was something along those lines, as well as using land points for making movement more accurate. Also, fun fact, the internet was invented for the military, if I'm not mistaken. I'm pretty sure that one's correct, is that the internet communication system was originally a military use case sort of thing. There's a whole bunch of stuff that it was originally meant for warfighting that just found its way into people business.
Necessity is the mother of invention. If you look at the vast majority of the medical breakthroughs that we had, it all came during World War II, baby.
Yep. That makes sense, man. That makes sense. When you push people off the edge, that's where the innovation comes in, right? Because it's a necessity for survival.
Dude,
otherwise, don't totally go look up how the Japanese sold us a bunch of scientists so they avoided war crimes and then we got technology out of that. That totally didn't happen and isn't the basis for a lot of things.
Dude, Unit
also
731.
NASA. Don't look too deeply into their the backgrounds and the scientists there.
Yeah, bro. For those of you who don't know, Unit 731 was a Japanese torturing / research facility, and they're the reason these some of the atrocities committed during World War II are the reason that we know that the human body is 78% water. It's how we know how to treat frostbite and how to deal with a whole bunch of medical problems. So there's a whole bunch of horrible stuff that happens, and then there's silver linings that we find in it, years and years down the road, or just the world is advanced through these terrible, horrible things that happen in as a result of war. So it's just one of those unavoidable things. I'm definitely not there's no condoning of the actions, but it's think of all the people's lives that are saved as a result of this information that we now have because people decided to commit atrocious things.
Yeah. If you want to read about actual evil, read about 731, man.
Yeah, dude. Unit 731, man. There are. Ooh, boy.
Yeah, you want to have nightmares, especially if you have good imagination?
Yep.
Yeah, read about some of the shit that they did, bro.
Mm-hmm.
Well, no, I don't want to stray too far off topic. We are completely
crypto and money and stuff, right?
Crypto.
So I did want to pose another question in regards to the article. I mean, look, don't get me wrong. I love talking about the conversation that we just had. That's why I let it sort of run its course, because that's I love talking about that stuff. But so I want to come to another aspect. So when we talk about Spain, okay, so Spain's GDP is $1.49 trillion. All right, it rose 1.5% in 2023. All right, the annual inflation rate is 4.3%, so it's comparable to the United States. But the unemployment rate is 12.6% right now. All right, so with a comparable inflation rate to the U.S., but with an unemployment rate of 4 times that of the United States, can we really expect can we expect to see any sort of price or adoption, initial increased price or adoption off of this announcement alone? Or is this something that's just going to, add, throw another grain into the bag. And then, when we start getting roaring into the bull cycle, this is all going to come together in one picture.
I think it's another grain of sand heaping in a pile. It's just Coinbase has been stacking small victories, and they're doing super well as a result of it. This is just another example of them just small wins. Take a little bit here, take a little bit there. Next thing you know, you're going to be in the end zone.
Yeah. Don't underestimate exactly how powerful small wins and building positive momentum can do for you, man. Like, look, you might not be a fan of Coinbase, but you cannot freaking ignore exactly how much momentum they've been building up over the course of this last year, man. Especially consider the fact that the U.S. has basically pushed out all of these other major exchanges out of here, man. Most notably, Binance US, right? With CZ at the picture here in the U.S., bro, man, Coinbase has a big monopoly within the cryptocurrency space here. So don't ignore them, man. Like if for anything, use that opportunity with them getting bigger in order to make money. Because if you ignore Coinbase and what they're doing and the wins that they're racking up, you're gonna miss out on some crazy opportunities, man. So I'm not endorsing them as like, hey, they're the greatest thing since sliced bread. I'm saying pay attention, man, because I guarantee you right now, the things that they're doing are going to affect your favorite altcoin or whatever. Guaranteed.
I love the football analogy that my bad. Well, yeah, I love the football analogy that Zenith came up with. I think
I just ripped off the longest yard. Was it the halftime speech?
Yeah,
it was like we'll scrap our inches together and
I tell you, if you get 3 yards every time you run the ball, you're eventually going to get in the end zone. And you're not going to turn the ball over. So that's perfect. You don't need chunk plays. You know what I'm saying? This is just another little thing that's, it's another piece of sand that's going into the bucket. It's another, 3rd and 3, run the ball for 4 yards, grind it out sort of thing. So, that's a great analogy. Will, what were you going to say, bud? I didn't mean to cut you off there.
It's like the iceberg that, carves the Grand Canyon. It doesn't go fast. It goes slow and it goes smooth. And it's just
yes, sir,
freaking chugging along, man. Yeah. It's another thing that's interesting to me. It's a little bit frustrating because the Coinbase doesn't have a fucking coin yet. They're a publicly traded company, as I recall.
They're waiting, man.
Like you can buy Coinbase stock. You can't buy Coinbase coin. So it's like, all right.
I think they're timing it perfectly. I think they want to get the hype to the point where it's like people are demanding it, and then it's like, okay, you want it? Here you go. I think it's actually genius.
Yep, it's pretty genius, man. That's why I say pay attention. Oh, Josh, you mentioned something earlier about Spain's unemployment, and you were like, oh, is that 12%? I was like, oh, I bet that's exactly what Jay Powell wants to hear.
Yeah, probably.
Before it starts reversing.
Yep. But you know what? Inflation or unemployment's definitely going to have to go up in order for this, in order for the inflation to start coming down. I mean, with two consecutive months of increased inflation, I mean, it's going the opposite direction. You know what I'm saying? So we're at 3.8 right now as of the latest report, and there's a very strong. I said it last week. I can't remember. If I can't remember if I said it on stream or if I typed it in the behind the scenes chat or whatever, or maybe I was laying on my couch. I remember because you guys were doing the stream. This is before I hopped on. But there's a very real possibility in Q1 of 2024 that we could have a 4.1% inflation rate and a 4.1% unemployment rate. And that is heading in the complete opposite direction of where we want to see this thing going. And, if those two numbers start to tick up, that's when stagflation might need to be, discussed and talked about and really considered. I don't know if we're quite there yet, but if those two numbers keep going up, especially if the Fed is going to do something completely off script that they did, when they have this evidence and then they decide to pause, it still baffles my mind. And to me, I was all about giving Jay Powell credit for the tough
being a man of his word
decisions that he had to make. Yep, I was all about giving him that sort of thing. But with this action, I don't know. I'm not, at the end of the day, though, I'm not an economist. They might have information and data that I don't have.
It honestly does look like cherry picking data, especially if you look at the last numbers. So going month by month, we absolutely are increasing. We're going the wrong direction. However, if you pick, I don't know, a 3-month average over the last year, then yeah, sure. And you only look at core inflation, we went down from like 4.7 to 4.3. Fun fact, 4.3 is still more than double where we want to be. So
it still trips me out how they're like, oh, we're just gonna consider core inflation that's going down, but then core inflation doesn't take into consideration energy and food, and you're like, oh, okay, the things that people care about the most, we're just not gonna consider it. So
it's such a smoke screen. I mean, that's what it's a smoke screen at the end of the day. 2 years ago, 3 years ago, we had 1 point something % inflation, and then 2022, I think we get it. What was the high that we got up to in 2022, Zenith? Can you remember what the high was?
I want to say it was like 10, 11%.
Yeah, 10 or 11%. And now it's at 4, and it's like, oh, it's victory. And it's like, well, no, that's a smoke screen, because at the end of the day, it's not where it was, and it's all just a smoke screen, man.
It's like declaring victory before you finish the fucking race, bro.
Mm-hmm.
Like, you're running 1,000. You still got 200 to go, man. Still got 200 meters to go. There is one more thing about the article that I really wanted to get your thoughts about. So, remember I mentioned how there's going to be regulations surrounding stablecoins? Apparently, the EU says if your stablecoin is not pegged to our currency, right? I'm assuming it's the euro. So if you're pegged to like US dollars, we're limiting your transactions to 1 million a day. So I wanted to get your guys' thoughts on that.
God fucking damn it. Of course, this is Peanut's problems for, Peanut Brain Diamond Hands. Like, man, I don't have that money to transact, but presuming I did, man, that's fucking annoying. That seems arbitrary, right? Like, if you don't, of course they want to incentivize using the currency that they are like, it'd be like, if you're in the United States and you're a fucking shop and you're say, hey, you can only spend 200 pesos here a day. You can't, or whatever. I understand that there's like, hey, we want to incentivize the usage of our currency more so than other currencies, but God fuck, like, it just seems like an arbitrary, stupid little rule. It's like I had some kind of hopes for this until you mentioned that. God damn it, Jay.
Well, what this really is this is an attempt at doing crypto tariffs, if you ask me. The idea is, hey, you got to use our stablecoin because it's tied to our currency, because you're going to be operating in our playing field. And again, this ties back to my point earlier, which is this is a bit of an L on a foreign policy standpoint for the U.S. economy, which is that if you are not actively capitalizing and being the place for people to build, then other people are going to take that and then try to shut you off from it and build up the walls. Granted, personally, if you ask me, trying to do tariffs through crypto is very dumb, because you can do things like Zcash or Tornado Cash and try to use mixers to get around it. And I mean, at the end of the day, you're just going to be trying to fool the tax man, and Lord knows that they're not exactly caught up on everything. But with that said, pay your taxes. It hurts, I know, but that's what it is. It's an attempt at crypto tariffs. Good luck. It's an outdated technique.
Either pay your taxes or learn the legal mechanisms by which you don't have to pay taxes. I think that we're probably going to cover this when we are doing our Rich Dad Poor Dad book later on in the future. But there's legitimate mechanisms that you can use to offset paying W-2 taxes. Really, the only people that pay taxes are middle class and people who just are virtue signaling, or something like what Elon Musk did when he sold off I can't remember how much he sold or got a loan for when he when he did his Twitter buy back in the day. But it's like you can avoid taxes by doing things that the government, sets up and structures for you to be incentivized to like provide value to their tax code talks about what you need to do in order to get tax breaks, right? There's illegal ways to avoid paying taxes, and then there's legal ways to provide value for the country that is incentivized with tax breaks. And if you do enough of those and you stack those up, then you can figure out the game and you don't have to pay taxes. So I will add that little tiny caveat to the pay your taxes thing. It's like you can, if you want to do it the easy way, or you can try and figure out like how you can generate value to the US government in such a manner that they give you a little bit of value back in the form of a tax break. When you were talking about the tariffs and stuff, I think that the only, or well, perhaps not, this might just be my peanut brain working here, but like the only time that it'd be relevant for people to switch to a stable coin is when they're exiting the market. So like unless people are doing that one very specific thing, like let's say that I wanted to exit from all of my positions, and so what I do is I go and like I can switch my crypto assets into a dollar, and I could then send it to an exchange or whatever, or I could switch it to a different thing and I could fly to a different part of the world, and like find a Bitcoin ATM or find a something that will allow me to withdraw my money in assets other than the dollar. So like I don't think that necessarily creating this little stipulation will have an effective result for anyone who's what's the word I'm looking for here, like takes the initiative enough to find out how they can off ramp other than through stable coins. So those are my two little thoughts there.
And I'm not going to say anything that these two guys haven't already said. I completely agree with what they're both said. It's the first I've heard of it, so I really don't have an opinion on it yet. I'm not going to be messing around in any other currency other than the US dollar unless I relocate somewhere else, or there's a significant investment advantage to doing so. But unless those two things are present, I'm only going to mess with USD and USD, US dollar currencies. So, but yeah, that's me.
Well, here's a thought experiment that I was playing with in my head, right? And we were speaking about this to a degree here during the show. So let's say that the Brussels effect does take off and the EU becomes the place that people look for crypto regulation. Let's say Gary Gensler does piss off all of these different industries or all of these different businesses, and all of them get funneled into where there is actual regulation, right? The main one right now we're speaking about is within the EU. And then you're here in the EU, now you have all of these, now you have all of this business, right? And then you're limiting people to, if you want to transact here, where the crypto market is, where the new frontier is, we're going to limit the amount of transactions you could do with any stable coin that is pegged to anything else besides the euro, right? What are the two biggest stable coins right now in the world? Well, you have Tether and you have Circle, both of which are pegged to the US dollar, mainly, right? That's what they carry their reserves in US dollar, or a portion of the reserves at the very least in US dollar. And so when all of that taken into consideration, I see that the European nation, if they do succeed, right, and if Gary Gensler does succeed in his vendetta to push the industry outside of the United States, then people are going to be stuck between a rock and a hard place, right? If we want to transact here, because this is where all the action is going on, then we're going to have to adopt the stable coin that's pegged to the euro. Now imagine what that does if crypto becomes as big as we think it's going to become, and stable coins are going to be a very big part of that. What that does to the euro and the strength of the euro compared to the US dollar. So I'll leave it at that. That was my little thought experiment. If you guys have any comments on it, please comment. If not, I'll just leave it at that for the night.
All right, no comments. I guess that works. All right, you guys ready to start rap?
Let's do it.
Good.
The rap.
All right, Will, go ahead and start it off, buddy.
So I am in St. Louis. So if there's anyone in the Missouri, Mississippi, Arkansas, Tennessee, whatever the hell area that's Illinois, I think is next to, I don't know all the states that are next to Missouri. Forgive me if you're close, but if you're close here, hit me up and I'll fucking swing by and say hi. I'm going to be in the area for about a month. And then obviously, you know, I'm heading down to do the Cardano conference with Mr. Josh and Mr. Brendan as well. And I do believe that you guys had mentioned that Antoine will be over there as well. So we'll be all meeting up in Miami and having a good old time over there. Other than that, I don't really have a whole lot going on. I'm just looking at prices and fucking dumping up the dump truck and throwing all my money into this ecosystem, hoping that it doesn't go to zero and I can feel good for being a diamond hands. Mr. J, what's up with you, bro?
Well, because you mentioned the chart, I wanted to take a quick look at what's going on. But it's red now. So we'll see what happens when the rest of the market opens tomorrow. But until then, thanks again to everybody in the chat. We do appreciate that you spend a little bit of time with us because we know that time is your most valuable asset. You can find me at agent_J Schroth on Instagram, at _P90 Hex on X. Jesus, I almost said Twitter again. And you can find me on our Telegram chat. So make sure to click the link there and join because there's a lot of alpha and a lot of good conversations that occur there. And we're always more than willing and happy to help anybody from the beginner to the intermediate to the expert. And so please go ahead and click that link. Aside from that, we are going to have a special guest this coming Wednesday. I'll let Josh announce that because, you know, that's his producer thing. And that's it for me. Thanks again, guys, for joining us.
Zenith, what you got, buddy?
Alrighty, quick shout out to everybody that joined us for our AMA stream on Wednesday. Drinking hour was a lot of fun. I think I crushed 3 Coors Lights. It was a good time. Anyways, if you watch that stream, you'd also know that I rambled about Maximus DAO tokens for a hot minute. And I did mention that the base token had their end stake on October 1st. Guess what day today is? October 1st. So as a warning, you have 7 days to act on this. So if you previously have base tokens that you're holding, you can redeem them for Hex. I want to say it's probably like a 5% bump on your tokens. Like if you had like 20,000, you'll probably receive like 23,000 Hex tokens or something. And then also, if you don't do that, this is now an opportunity for you to put money into the system and help create new base tokens for the next cycle around. Again, base token is just a 1-year rolling stake that everyone puts into a pool through a smart contract and is redeemable at the end of the time. It allows you to trade your Hex tokens if they're staked up basically as a new token. Good way to do that. So just a reminder to do that. The website for that is perpetuals.maximus.cash. So that is my PSA for you. As always, I'm Zenith. You can catch me on Twitter at Hex Space Force or Instagram or YouTube at Hexco Space Force. And that is all I got for this week. Carry us out, Josh.
Did he just go digital for anybody else, or was that just me?
I was just thinking, hey, guys, make sure Zenith is talking about base as in not the Coinbase token, man. This is a project on Pulse Chain.
Correct. It's on Ethereum and Pulse Chain, by the way.
Yes.
Yeah, I heard you fine.
All right.
I don't know what's going on. Josh, close us out, bro.
Yeah. Am I is my connection all right? You guys hearing me okay?
You're lagging, buddy.
Good.
You're good, brother.
All right, cool. Because you guys went digital there for a minute, so I just want to make sure. All right, yeah. So we got Crypto Sloth coming up Wednesday night. So we got him in studio. We're going to be chatting with him. Agent J is going to be hosting that. It's going to be an awesome show. We're looking forward to it. We've been putting together a good list of questions and stuff like that we want to talk to him about. So I know he's excited. I know we're excited. So that's what we got coming up Wednesday. And then our main show coming up Sunday, we might be able to squeak in a DR Insights between Wednesday and between Sunday. But you guys have to hit that notification bell in order to do that. So again, guys, my name is Josh. You guys can find me on X at Chocolate. You know what? You guys can find me on Twitter because it's always going to be Twitter for me. It's never going to be X for me. So you guys can find me on Twitter at Chocolate Taints. For you guys that stuck around and caught us live, we can't thank you guys enough, panel. I want to thank you guys for your input as well. You guys make the show what it is. Can't thank you enough. So make sure you guys like, comment, and subscribe on the video. All right. And make sure you guys share it out across all your social medias. Check in the description. Join our Telegram. Make sure you become a member there. And check us out all across all of our social medias. So with that being said, we will be back Wednesday nights at 8 o'clock p.m. Make sure you set that notification bell. We will have Crypto Sloth in house. And we look forward to hanging out with everyone then. So with that being said, everybody have a good night, and we are out.